Hi, this is Kerry Artak with Wicked Stocks, bringing you an update in the TLT. That is the iShares 20-year plus Treasury Bond ETF. That is a U.S. Treasury Bond ETF. The TLT is probably, and I haven't looked lately, but I know it's historically been the most actively traded high volume Treasury ETF out there. And so I don't think I need to remind you, but as the Treasury bonds, or in this case, the Treasury bond ETF declines in price, you have an inverse correlation where interest rates are rising. So you could see how, following that historic March 2020 COVID high, that we've been in a downtrend in the TLT ever since, and that correlates well, of course, with the uptrend in interest rates. Now, you could also see how you could say that from October of 22, but certainly from October of 23, we've had these sort of near to midterm descents in interest rates, rising in the TLT, and then climbing interest rates, a descent in the TLT, et cetera. But there's been nothing substantial. The takeaway here, though, is the 5-year bear trend remains that case, remains bearish below 94.86, at least in terms of channel dynamics. And I think channels are a pretty good way to measure trend. Mathematically, we've got this sort of correlating pattern that holds below 94.86. And 94.86, is it in reach? I'll get to that in a moment. I mean, we're pretty close to retesting it or reapproaching it. And it is a formation that may well contain buying for the TLT through the rest of the year. This is a long-term 5-year descending channel top. And so let's move through the charts that I prepared. Holding below the 94.86 formation, or once tested, will allow the market to fall back to the 84.53 channel structure that we came close to testing, as you may recall, back in January. And we missed it by a degree, but it is still there. This is our base. What I would say is long-term interest rates remain bearish below 94.86. Midterm, they remain neutral, or in kind of a two-sided near-term framework above 84.53. If we were to close below 84.53, then we've got significant bearish continuation on a longer-term basis. In other words, interest rates continue to climb at a progressive pace as we move through the rest of the year, were we to close below 84.53. But right now, it's 94.86. Will we test it? Let me continue through the charts here. This just sort of underscores kind of opening the chart up a bit. This is kind of a zoomed in. This is kind of a continuation of what I presented you last week. I did an update in the TLT last week, and I'd mentioned how we've got kind of a dual approach here. I mean, we have the settlement above this descending channel top a month and a half ago at 87.98 that is held every subsequent test thereafter. But we also had the violation 2 weeks ago when we closed below this a nearer term rising channel bottom at 92.22. And this is holding this week. And so, 92.22, you could call this the beginning of a range up to 94.86 if you're a longer term position player where you're selling the TLT. Once again, selling the TLT as we continue. Sorry, wrong chart. As we continue through April and into May, we can fall away again into the mid-80s, 84.53. Back to this chart. The low, if you recall from last week, I'd mentioned that not only should we close below the 92.22 channel bottom, but in terms of a clear-cut sell signal back to 84.53, it would be closing below the low of the high of 89.73. And we did not do that last week. So that lends itself toward this more neutral near-term approach. 89.73, I think if we close below the low of the high that was put out in early March, then we should see continued weakness as we move through April and into May. This could be a 3 to 5 week sell-off to 84.53. Right now, you've got 92.22. The way I would characterize the week right now, 92.22 ceiling, 89.73 floor. If we close below 89.73, 84.53 likely within 3 to 5 weeks. This scenario, this outlook, essentially ignores this former descending channel top. So you have to reckon with that, if you will, on the way down. If you play the short side below 89.73, which is the low of the high, You can see that the black bar lit up there in the yellow square. If we close below that, yes, we'll hesitate, I think, for a week or two at 87.98. But I do think after all the consolidation, if we close below 89.73, you can play for 84.53 as a 3 to 5 week objective. Until then, it's pretty neutral. And this 92.22 rises in 92.99 next week, 93.76 the following. So the point I'm making here is even if this former channel bottom holds, it converges over the next few weeks with the long-term channel top at 94.86. So I'm just providing these levels for those of you who like to trade the TLT on a 3 to 5 day, 3 to 5 week swing trade basis. And I think I've outlined that pretty well. Let's move on to this chart. This is really the big picture that I've showed a moment or two ago. 84.53 midterm support, 94.86 long-term resistance. And if we close above 94.86 at the end of this week, and I do think that's a long shot this week, but it is certainly possible. If the tariff announcement that comes out on Wednesday, April 2nd, and I am recording this, by the way, on Wednesday, April 2nd. The tariff announcement has not been made yet. It'll be later today. If it is, an extensive series of tariffs and it sort of shouts tariff war or the beginning thereof, I suspect, well, it could go either way. I'm just kind of thinking out loud here. I think one of the things it screams is possible recession, and I think that is the kind of what we'll probably see as we move into later year. And under that scenario, we close above 94.86. But it's also stagflation has been touted as a likely outcome as well, where you've got higher interest rates in the midst of weaker economic performance. And so, you can have a recession and high interest rates at the same time. And higher interest rates obviously would mean a retest of 84.53 and a likely violation to the downside if the interest rate environment becomes, extensive in terms of continued hikes. So that remains, all of this obviously remains to be seen. I'm going through some fundamental scenarios. I'm a technician, so really what I'm saying is if we close above 94.86, and we do have a convergent channel top this week only at 94.34, but if we close above 94.86, this long-term descending channel top, I would expect within several months 103.12. And 103.12 will be, I'm going to remove this just to make the point, this will be our, how should I put this? This is a deep recessionary indicator if we close above 103.12. This mostly horizontal channel top, if we close above it, we have a good long-term low in the TLT. I think that there's a chance of a good long-term low anyway in the TLT if we close above 94.86. But it really is this 103.12 formation. I think that if we were to close above it, and I'll just recreate it here, if we were to close above 103.12, I think we're in a deepening recessionary environment where interest rates will actually continue south as the market is in a deep state of recession. But once again, I'm painting a picture that is yet to occur. This is all technical work. 94.86 ceiling, sellable ceiling for those of you who trade both sides of the market. You could reach for 84.85 strike out of the money puts that don't expire. I would go 6 months out on that 2 to 3 month downside play. The inverse can also be made. If we test 84.53 in the coming weeks, and I've already given you the conditions in which I would expect that, as we're testing 84.53, perhaps you reach for 90 or 92 strike out of the money calls that don't expire. I would go 6 months out on that. 2 to 3 month upside play. 94.86 is dropping into the 92 handle by late May. I think that pretty much rounds it out. I've said enough. I'm going to leave it at that for this particular Wicked Stocks video analysis on the TLT. You have a great day.